Hello everybody, welcome to another update on the stock screener. Today we are going to talk about copper and Nevada copper. But this is actually more of an emergency update on the copper price because we have seen copper fall below this head and shoulders pattern. So something is going on and we need to know what is happening. I've also lightened up on my high cost copper miners because this is not a good sign. So I have kept the low cost copper miners, but the high costs need to go. So what do we first do? We check the copper checklists. Let's take a look. So the global real economic activity is still okay. That's from June. We still need to have numbers from July. This was a concern because we see the 10-year yields coming down. And as you can see here, the 10-year yield has been coming down. So this is actually a sign that growth is slowing down. And that's bad for copper because the copper gold ratio will come down. So copper must go down. Let's take a look at these warehouse levels. You can see here that the warehouse stock levels have been going up. That's a bad sign. That means that there's too much inventory also at the COMEX. And well, actually in total, this is still going down, but the latest number of this week, we saw an increase in the China warehouses. So something is going on now. Apparently there's enough copper now. We also know that China is still dumping copper onto the market. So that has an effect. Power consumption numbers were actually good. So the latest number was a rise in power consumption in July. So this number is good. China is still growing. But this is a warning sign. And I talked about this. This is the China credit impulse. We are now somewhere here in the second half of 2021, which is exactly the top of this credit impulse chart. Okay, so from here on, we will go down into next year. So that means that GDP, PMI is actually the same as GDP growth. This will start going down now. Okay, and that will not be good for copper and commodities. Now, I also know that this has already bottomed out. There are new numbers here that we have bottomed out here. So probably this will come down until next year and then start rising again. But now we have reached the top here. As you can see here, GDP is correlated to this credit impulse. Goes down, goes down, goes up, goes up. Now it goes down again, so this GDP number should go down. Shanghai Composite Index is also topping out. It's not that bad, but it's starting to roll over. So I had hoped that we would see a breakout, but apparently should go down and next year probably go back up. So that's also not a good sign. GDP forecast of the Fed. We see that GDP is pretty stable, so nothing to see here. We know now that Escondida mine, that there's no strike there, so production will keep going there. So yeah, production, no problems on that side. We are still in deficits, but growth is slowing. Seasonality, we are now in August, but September should be a very bad month. See, copper will be going down and bottoming out in October and November. So this is actually a very good time to lighten up on copper miners. The COT report is actually pretty okay. Open interest is down, less shortest, but I could see this go even higher here. So that's, we can still bottom out more in copper. So probably this can go to around 3.5 to 3.75, and then that should be a bottom. Australian dollar is very bad, also a bad sign. This Australian dollar has kept going lower. As you can see here, we had a dip and then it went back up and now it started to roll over again. So this tells me that commodities are in a bear market. The technicals, yeah, we have topped out. This is a head and shoulder. CRB is also rolling over because oil is rolling over. And we all know that the Delta variant is putting pressure on the oil price. So that's why the CRB index is going back down. So oil is not doing well. Shipping rates are still okay. As you can see here, still at all-time highs. So that's no problem. Yardeni's forecasts are very good. So the forecast says that we are still going higher in the stock market. So we have kind of a tug of war between positive and negative indicators. You see here, inflation is actually going down again to a 2.3% break-even inflation rate, but it's pretty stable around here. And here you can see the leading index a bit in the red, so growth will slow down a little bit into next year. So that's again a bad sign. Less growth is a lower copper price. And we are probably seeing the nanocycle playing out. A little bit of a correction first, and then a bottom before we can go higher. So it is a good time to lighten up on some copper miners. Let's take a look at China. Also very important. Real GDP is still growing. Industrial production is down. That's not a good sign. Electricity, as I said, made a new high. That's a good sign. PMI should go down because the leading index was down and also the credit impulse is down. So I think that the PMI will roll over like this. Here the same will roll over. That's not a good sign. The same here. Retail sales seem to have topped as well. Vehicle sales are very bad. Vehicle sales were down. I've also sold all the PGM miners like Sibane Stillwater because this is not good for the rhodium, palladium, platinum metals. If nobody sells cars, nobody needs the PGMs. So that's a very bad sign for that sector. So that needs to be sold. Trade balance is still good for China. So the yuan should be strong. Here you can see that export and imports are actually also going back down. So that's bad for GDP. As you know, GDP will go down in growth by next year, probably. Let's see what we have. Railway also looks like it is topping out. And this is actually stable. Producer prices are still high, so there is inflation. Consumer prices are up. Still a lot of inflation here. But apparently inflation is lower than in the US. Here you can see that the stock market has actually gone down in China, and the copper price follows the stock market. So this is also a sign that copper could come down to the 3.5 level. 3.5 level, you need to sell all the copper miners that are high costs in 2.8 to the 3 level. For example, Sierra Metals has an AISC of 2.8, needs to be sold. If copper comes down to here, there is no margin anymore. Bank loans were also down. You can see here the bank loans. Bank loans are almost topping out, but I think the trend is still up, but could come down more. In the US, loans are flat. So all in all, it doesn't look very good for copper. And now let's take a look at Nevada copper. You can see that Nevada copper is crashing 20% per day. So they were at 0.2. Now they are at 0.1. So they have crashed in half in about a week time. So what is actually happening here? This is a complete underperformer. Let's take a look at the latest news release. So they are developing stopes. They have delays of the ventilation fans until the end of the year. So that's bad. So they cannot start mining without ventilation fans, of course. And they have now been mining at 3,000 tons per day. and need to go to 5,000 tons per day. But the development rates are slower because they have this problem with the water-bearing dike structure. And so 3,000 will be at the end of the year. Lateral development is ongoing, but they have problems with this dike. So the production is actually not a lot. So they're still ramping up. And here's the same 3,000 by the end of the year, but 5,000 in the first half by next year. So we are seeing here a lot of delays, and they will probably only go into production a year later from now, in somewhere August next year at 5,000 tons per day. And 5,000 tons per day is actually their plan. Okay. So this was their feasibility study, and they wanted to go to 5,000 tons per day at an AISC of 2. That's the grade, and that's the production. Mine life of 13. So if you do the calculation with $4 copper, then you get a valuation of 600 million. And today it's at 100 million. So why is there such a difference between the valuation and the current market cap? That's because they have delays until next year. But there's another problem, a much larger problem, and that's the balance sheet. Look at the latest balance sheet. You can see the assets, and the majority of the assets are properties, mineral properties, plant and equipment, 800 million. They only have about 10 million in cash. But how much debt do they have? They have accounts payable, they have warrants, they have working capital, they have debt, 260 million. And then they still have long-term debt, 50 million, and some royalty payments. But all in all, this is around 400 million. So they only have 10 million cash and over 400 million debt. So that's the problem. They don't have any liquidity left. And let's take a look at their net earnings. It was minus 14 million per quarter. So 10 million minus 14 million, they really don't have any cash left to even develop it. So they need to get in more debt. And that's exactly what they are doing here. Credit facility. So they get into more debt, 15 million debt here, 27 million here, 8% interest. So they are getting more and more into debt, need to pay more and more interest, and they cannot pay it off until next year because they have delays. So this balance sheet is going to deteriorate more and more, and that's just going to bankrupt the company. And that's how this is trading right now. It is trading like a company that's going bankrupt, going to zero. And on top of that, the copper price is crashing to probably 3.5, as I told you. What's the cost of this mine? $2. So what we are seeing here is margin compression this high margin will be compressed to 3.5 to 2, and they will probably have less earnings to pay off all of this debt. And that's a very big problem because this is the thing that they are building now. And to get this built, they need even more capex of 700 million on top of this 500 million. So, I mean, this will never get built. There's no way that they are going to do this. And the investors know that. And that's why this is crashing to zero. And I'll see you in the next video. Bye.